Hi, everyone. I'm Emily Marsh from the Greater Concord Chamber of Commerce. Thank you so much for joining us today for this webinar. I just want to kick things off by letting you know about a few resources that the Chamber has available to you. If you have questions or are looking for assistance, whether you're a business owner, an employee, no matter where you are, please check out the Greater Concord Chamber of Commerce's website. We have a special COVID page where you can find links to many, many resources. And we do update that page on a daily basis. So it has the most up-to-date information. So to get there, you're going to want to go to concordnhchamber.com. And from there, you'll see a link to our COVID page. I also want to go through some housekeeping. So there's a Q&A feature. If you tap your screen, if you're on a smartphone, or you wiggle your mouse, if you are on a computer, you're going to see a Q&A button pop up. That is where you're going to want to submit questions during the event. You just type them in and our presenters will be able to see them, and we will answer them. We'll have a question section at the end. We'll try to get to every question, so please use that tool if you have a question. And then I also just wanted to thank Orr Reno. They have come on board actually as a webinar sponsor for the Chamber. We're so thankful for that, and they have committed to doing a weekly webinar with us, discussing issues related to the COVID-19 crisis. So they're going to be talking about a lot of really important topics for business owners with the most up-to-date information that we have. So thank you again for you all joining us here today. And without further ado, I'm just going to hand it over to you guys.
Thanks, Emily. So good morning, everyone. Wanted to introduce So I'm Nathaniel Morse. I'm an attorney at Orr Reno. I'm here with a few of my colleagues, Lindsay Nato, Connie Lane, and Tony Sayess, who are going to be available to help answer questions at the end of the program. So we're going to just give a relatively brief overview of the Paycheck Protection Program, and we're going to be focusing on some practical tips for how to navigate this. So we're really hoping that this is going to be something that business owners and organizations who are considering this program are really going to be able to use and apply, because there's a lot of information about the program that's out there, and we're trying to distill it down to really give you kind of the nuts and bolts of what you need to be aware of with this program. And then, like I said at the end, we're going to have a substantial amount of time for questions, because I know people have questions. We're getting a lot of the questions. And so we want to make sure that we're addressing your specific questions, especially if it wasn't directly addressed in the presentation. So today, the agenda for what I'm going to talk about is just briefly going over what the Paycheck Protection Program actually is. I'm going to touch on applying for a Paycheck Protection Program loan for those of you that might still be considering. But I also know that a lot of people have already applied for loans. Some of you have already been approved, and some people even, I think, are already getting their loans dispersed. And so what we're really going to focus a lot on right now is the logistics of loan forgiveness, because that's something that once you get dispersed, there's some certain components that you're going to want to be aware of for how you use the loan and some of the things that you can control so that you can maximize loan forgiveness of this program. And then briefly, we want to touch on a couple of other relevant programs that you might have, just even if you're not aware of or if you might have heard of. We just want to remind you that the Paycheck Protection Program, even though it's getting a lot of press and a lot of discussion, isn't the only opportunity that you should be aware of to help get your business through these uncertain times. And then, like I said, we've got some time for questions at the end. So what is the Paycheck Protection Program? You might already be aware of it. You might have already attended a webinar presented by Orr Reno or the Business Industry Association or other outlets that are providing that information. But if not, if this is your first introduction, then it's a special SBA loan program that was created as part of the Federal CARES Act, which was passed at the end of March. It's an emergency response legislation that is directly addressing some of the specific concerns that small businesses and nonprofits and other organizations are facing. Currently, it's a $349 billion program that's designed to keep small businesses afloat during this emergency. And because it's directly focused on these next few months, it's designed to be implemented, and then mostly it's going to phase out by June 30th, 2020, as it's currently set up. And the goal of the program is to keep employees from laying off employees. And so that's where, when we get into some of the nuts and bolts later, that's really what it's focused on. And so there's some policy triggers that are designed to keep businesses from laying off those employees, to keep the employees from receiving paychecks, and to help the businesses actually manifest that. So the huge advantage of this program is that depending on how the funds are used, that some or all of that loan could be forgiven, and that it would be tax-free. And then additionally, because of, in part because of the quick rollout of the program, the SBA is not requiring a personal guarantee or collateral. And this, if you've applied for other SBA loans in the past, is going to be a big difference. And so if you haven't applied for the loan, just want to give a brief overview, and specifically who's eligible for the Paycheck Protection Program. And it's a U.S. businesses, which includes self-employed and independent contractors, sole proprietors, which is a deviation from other SBA regulations. It's small businesses, so generally it's businesses with less than 500 employees. Although there are some differences there depending on the affiliation rules for commonly owned companies, and then also some employers that might employ more than 500 people. But generally, it's focusing on those businesses that employ less than 500 people. And then also independent contractors and sole proprietorships who have no other employees are eligible under this program. But then if the applicant has pending criminal issues or has had criminal issues within the previous 5 years, that can make them ineligible. And so if you're eligible to apply for a Paycheck Protection Program loan, then you're eligible to get a loan amount that is capped at 2.5 times your average monthly payroll cost. And the way that this is calculated is that you're going to calculate your average monthly payroll cost over either the 2019 calendar year, so January 1 through December 31st of 2019, or of the rolling 12-month period just prior to your application. So basically April 2019 through March 2020, and you can select which one. There's other specific requirements if you have a business or an organization that wasn't in business for that entire time period, and then also for seasonal businesses. So those are a little bit different, and you should be aware of those if that describes your business. And so additionally, the loan is capped at $10 million. So if your average monthly payroll cost times 2.5 comes out to more than 10 million, then your loan would be capped at that $10 million. And so one of the focuses that I want to make sure that we discuss in this is what are payroll costs, and because this is important for both the application, but it's also important for calculating loan forgiveness. And so the program defines payroll costs as the salary, wages, other similar compensation that an employer pays to the employee in any form like that. But it's not limited to that salary or compensation. It also includes family or paid leave for example, for vacation, for family leave, medical leave, sick leave. All of that is included in that payroll cost. When you're calculating the average monthly pay cost over the last year, It can also include dismissal or separation allowances. And then payroll costs also are going to include payments that the employer makes for example, healthcare benefits, insurance premiums for that healthcare, and then also things like retirement benefits, like the 401k match. So that's all included in that payroll cost. So when you're applying for that, you're including all of that when you're calculating that average cost and then multiplying that by 2.5. Some specific things that it excludes is compensation over $100,000. And if you were looking into this, or even potentially when you applied, there was some confusion related to how that compensation above $100,000, that cap was calculated, whether that was limited to just salary and wages, or whether it was the entire compensation package. And the SBA has clarified that $100,000 limit is limited to that salary or wages. And so the entire compensation package for a single employee could exceed that $100,000 when you include in some of the retirement benefits and health insurance benefits. And then lastly, just want to mention that there's the federal government, when they passed this, limited any double dipping. So if you're taking a credit for sick and family leave under the Families First Coronavirus Response Act, you can't then also claim that as a monthly payroll cost in your application, or more importantly, also in the loan forgiveness. And so once you figure out what your 2.5 times your monthly average payroll cost is, then you're ready to apply, and you apply through a bank that is an SBA lender. If you've not applied yet, we would recommend that you get that application materials ready and you start coordinating with a bank, because this is a first come, first serve funding source. And so I think there's some concern that the $349 billion might be used up. And even though there's some discussion in Congress about supplementing that, it's unclear right now. So if this is something you're interested in, you're going to want to coordinate with the SBA lender to get that. And if you have a pre-existing banking relationship, that would be the best source. If you've already gotten an SBA loan from a local bank, then you would want to go back to them and start that discussion. And a lot of banks, because of the high demand, really are taking care of customers who they have that pre-existing relationship with first. So if you haven't applied and you don't have an existing relationship with a bank, then it might be difficult to do. We've got some colleagues at Provident Bank that are now accepting applications for businesses that might not be currently customers. And so that's one resource that you might reach out for. And then within the application, there's a number of certification requirements that you're going to want to review before the application. But then once you apply, the loan terms, it's your loan at 1% interest, but that's only for the portion that is not forgiven. We'll talk about shortly. And then the actual application, you're going to need to calculate the costs, provide the calculations and the documents to the bank, and then you're also going to need to certify to the accuracy. So that's the process for applying for the Paycheck Protection Program loan. So then once you have the Paycheck Protection loan, and as I said, many of you might already have applied, some of you already have the money, but that's when you need to start thinking at the beginning there about the logistics of the loan forgiveness. It's something you want to come in with a plan so that you can maximize the amount that's forgiven, and you can take advantage of the benefits of that program. And so the SBA has provided some guidance, some guidance from the statute that we know for a fact that Paycheck Protection Program loans will be forgiven as long as, number one, that the loan proceeds are used to cover payroll costs and other authorized costs over the 8-week period after the loan is made, and number two, that employee and compensation levels are maintained. So those are the two factors that need to be considered, that the SBA is going to consider in determining forgiveness of the loan. And I want to, right here, before I get too much into the loan forgiveness, I just want to highlight that we're waiting on additional guidance from the Small Business Administration on loan forgiveness. There's information in the statute. We've gotten some limited information from the SBA on how they're going to calculate loan forgiveness, but we don't have a full kind of set of guidance about how they're actually going to be calculating loan forgiveness. And so this is all somewhat preliminary, and I just urge you to keep abreast of those changes. At Orr Reno, obviously, we're keeping abreast of it. We're going to keep putting out information on our website. So check in with that. But based on what we know now, we know that there's 4 different factors that the Small Business Administration is going to be considering in terms of reducing the amount that's going to be forgiven of that PPP loan. And so loan forgiveness will be reduced if a business, number one, if you use the loan for anything other than payroll costs or other authorized non-payroll costs. Number two, that you use more than 25% of the loan proceeds for non-payroll costs. Number three, that you reduce the number of employees. Or number four, that the business reduces an employee's wages by more than 25%. And so when we talk about these, the first thing is, what are we talking about when we're talking about payroll costs or other non-payroll authorized costs? So first of all, the covered period that we're talking about is the 8-week period after the disbursement of the funds. So that's when, based on all the guidance that we currently have, what the SBA is going to be considering for determining loan forgiveness. And over that 8-week period, one major factor is the payroll cost. And so again, this is that same definition as that you use to calculate your average monthly payroll costs for applying for the loan. You're still looking at salary and wages, which is capped at $100,000. You're going to be looking at employee benefits, retirement and healthcare. And then you're also going to be looking at the state and local taxes that are assessed on compensation. So for example, state unemployment taxes. All of that is going to be included in that payroll cost. So a lot of that loan is going to be used to cover that. But you're also able to use that loan for these other authorized uses. So number one, you can use it for mortgage interest. So if you own your building with a mortgage, or your business location, you're going to be able to offset that interest with that loan, pay that interest with the loan, not the principal, but the interest. If you're renting, you're going to be able to pay the rent with that interest or with that loan. And then lastly, you can use the utility payments. You can pay the utility payments using the loan proceeds. So number one, you can pay your electricity bill, you can pay the gas, water, telephone, internet. All of those things are authorized uses under the statute to use the PPP loan proceeds from. I do want to mention that all of these obligations had to exist on February 15, 2020. So unless you went out and rented a new facility after that February date, presumably you're going to be able to use these. But I do just want to mention that if you have fallen into, if you fall into that where you recently moved locations or you changed anything, that might be something that you'd want to be aware of. So as long as you're using your loan on those authorized payroll or authorized non-payroll costs, the next step is you want to make sure that you're using more than 25% of the loan proceeds for non-payroll costs. And so just a quick backup, where this 75% number partially comes from is that when you applied for the loan, you applied for 2.5 times the average monthly payroll. So if you had applied for just 2 times the average monthly payroll, then that would cover that 2 months of payroll costs, and you would presumably be using 100%. But the way that the application is, they acknowledge that, and it's designed that you're going to be using it for more than the payroll costs. But at the same time, the SBA has indicated that they want to make sure that primarily you're using this for payroll costs, and that's where this 75% number comes in. And so when you are using your PPP loan funds, you want to make sure that you're targeting that 75% of those costs are being used on the payroll costs. So again, wages and compensation, benefits, state, local, taxes that are related to it. So you want to make sure that that's the bulk of that, and that 25% or less of that is being used on these other authorized non-payroll costs. So the mortgage, interest, rent, and utilities. And again, unauthorized costs would not be considered in this 75%. You don't want to be using the PPP loan proceeds for anything besides these, because they're not going to be used in the loan forgiveness, and B, depending on how you're using them, that could be something that would cause problems with the SBA. So I want to just reiterate that these are the authorized costs. And so as long as, well, let me back up. And then in terms of the function of this is that if you, depending on what the logistics of, and certainly there's going to be situations where a business is not going to be able to spend that 75% on payroll costs. Yeah, it's not that you're going to lose any chance of forgiveness. It's just that the amount of forgiveness, if you use at least 75% of the loan proceeds on payroll costs, then the full amount that you spend on these authorized uses would be eligible for forgiveness. If you use less than 75% on payroll costs, then the SBA would recalculate how much of your loan would be forgivable, and it would reallocate that. So if you use, for example, less than 75%, they would reduce the forgivable amount to such an amount that the forgivable amount was 75% payroll costs and then 25% non-payroll costs, and then there would be a chunk at the top that would be non-forgivable. And then after you calculate that 75% amount for payroll, then an additional amount could be reduced based on whether a business reduces the number of employees. And so if you reduce your workforce, then the amount of loan forgiveness is going to be reduced proportionally. So unlike with the 75% payroll cost versus 25% non-payroll cost, there's no threshold here. It's a proportional reduction based on how much of your FTE, your full-time employee equivalents, reduced compared to one of two comparison periods. And so the SBA is going to be looking at the February 15th, 2019 through June 30th, 2019 period, and the January 1st, 2020 through the February 29th, 2020 period. And so you're gonna have the option of selecting which of those you want to use as the comparison. So presumably you're going to want to select that period where you have a lower FTE as the comparison. And the way that this would work, is that if you take the potential loan forgiveness amount, which is again the amount that you spend on payroll costs and authorized non-payroll costs after considering that 75% threshold, you'd multiply that number by the average number of FTE per month during the covered period. So that's the average number of employees that you had during that 8-week covered period. And then you would divide that by the average number of employees during either of those covered periods, whichever you select. And so if you had a 10% reduction in your workforce over that covered period compared to that comparison period, then the potential loan forgiveness amount would be reduced by 10%. And the one kind of wild card in this is that the way that the statute is written is that you can reduce that or exempt that workforce reduction if the employees that caused that reduction were reduced between February 15th and April 26th, and then are rehired by June 30th. But again, this is the way that the statute is written. We haven't gotten any guidance from the SBA on how that's going to work. But I want to mention that if you've already, because of the current circumstances, had to reduce your workforce. At this point, don't despair. There might be a way to kind of handle that a little bit on the back end. But at the same time, too, you look at the average number of FTE per month during the covered period. So it's not looking at what's going on day one. It's taking that average over that entire covered period. So if you add somebody throughout the process of that covered period, that's going to be reflected in how much of your loan forgiveness is available. And then finally, the last way that the loan forgiveness can be reduced is if a business reduces an employee's wages by more than 25%. And so the loan forgiveness is going to be proportional to the actual amount of salary reductions that's greater than 25%. And so it unlike with the reduction in workforce, this isn't a proportional, this is a dollar for dollar reduction. But also it does have that threshold. So you have a little bit of room to work with before that reduction is in effect. And I'll mention that this only applies to employees with annual wages or salary of $100,000 or less. So those highly compensated, $100,000 or more, it doesn't apply. And so the way that you're going to quantify the impact on forgiveness is that first you're going to identify employees with reduced wages or salary. So if everybody maintains their salary levels, then this is going to be not going to affect forgiveness in your situation. But if you did have to reduce wages for certain individuals, you're going to identify those individuals. And then you're going to remove those that are making more than $100,000. And then once you have that potential pool, you're going to calculate how much those employees were making during the first quarter of 2020, and then also what they made during that 8-week cover period. And I would suggest that you do an annualized rate just for a comparison standpoint, just because you're obviously dealing with different time periods. First quarter of 2020, you're looking at 13 weeks. During the 8 weeks, you're looking at that 8-week period. So you're going to want to look at that difference there, and then calculating that percent reduction based on that apples to apples comparison. And if that percent reduction is greater than 25%, then that's where it's going to trigger a difference in the amount that you can forgive. As long as that percent reduction is 25% or less, then that's not going to have an impact on the amount of loan forgiveness. And then what you do is, if you do have that greater than 25%, then you quantify the difference between the actual pay over that covered period and the 25% reduction over the covered period. So importantly, you're not quantifying the difference between the 100%, the unreduced salary, but it's only the difference between that 25%. So once you hit that threshold compared to that, and then you're going to add up the actual salary reduction for all employees. And I'm going to just real quickly explain kind of how this is calculated, because I think that this can be a little confusing. So if you consider 4 employees here who all had annual salaries of $40,000, and they were paid that during the first quarter. During that 8-week covered period, they got paid different amounts, and so ranging from $6,000 to $3,000. And when you then annualize that over, to calculate it over a 52-week period, you can see that the annual salaries, the annualized salary of that covered period ranges from $39,000 to $19,500. And when you compare that to that $40,000, the percent reduction differs between 3% and 51%. And so the first 2 employees had a percent reduction of 3% and 25%, which doesn't impact the loan forgivable amount. But the second 2 employees, or the third and the fourth employees, did have percent reductions that exceeded 25%. And so we would calculate, for example, for the third, the difference between that payment over that covered period of $4,000 compared to the 25% recovered amount, which is $4,633. So that reduces the forgivable amount of your loan by $633. So then you combine that with the fourth employee, and the payroll reductions resulted in a total reduction of the forgivable amount under the Paycheck Protection Program loan of $2,266. And what you'll see is that that's the specific amount that your employees were not getting getting paid. And so I think this is a consideration that businesses might want to consider, is that even though you might be reducing those wages, that's not going to be affecting your take home, because you're going to end up paying that back. And so it might be something to consider if you feel like you need to reduce wages, how that's going to affect the forgiveness of the loans. And then lastly, in terms of documenting the loan forgiveness, after that 8-week loan period, the borrower is going to need to submit an application that seeks the loan forgiveness. And we don't have a copy of that. The SBA hasn't released what that loan forgiveness application is going to look like, but we do know you're going to have to, include some documentation. So you're going to have to document payroll and an FTE, and that could include payroll tax filings to the IRS and or the state as documentation for that. You're going to have to document authorized costs. So you're going to have to show canceled checks, for example, for rent. You're going to have to, include receipts for utility bills, anything like that. And then when you submit that, the borrower is going to need to certify the authenticity of that documentation to get that loan forgiveness. And then additionally, you're going to have to keep in mind that there might be other documentation that the SBA determines is necessary to evaluate that loan forgiveness application. And so just briefly, I wanted to mention other options for businesses. We're not going to spend a lot of time on that here, but there are economic injury disaster loans, the EIDL, and then within that there's the EIDL emergency loan advance, which businesses can get a $10,000 advance, and that acts as a grant. So that's definitely that businesses would want to consider. There's also some tax credits that are available. And then specifically for nonprofits, there's the New Hampshire Nonprofit Response Fund, which if nonprofits have questions about that, I know Connie is prepared to answer some of those questions here, or you can obviously follow up with her too. And so, in conclusion, I wanted to circle back, because what we really hoped is that we wanted to give some practical tips for businesses. And so if you're out there and you are looking for the takeaways on this, these are what we want you to remember. It's number one, apply for a PPP loan if you are eligible. If you get a PPP loan, spend it on the payroll and authorized uses. And then try to spend at least 75% of the loan on the payroll. Minimize the FTE reductions to the extent you can, and then avoid reducing the salary above 25%, especially keeping that in mind. If you can avoid hitting that 25% reduction, that's something that you're going to want to work on. And then lastly, and definitely kind of number 6 on the list, is that if you did have to reduce your FTE or reduce salary, you want to rehire or eliminate those by June 30th of 2020, because there's definitely some exemption that's going to be in there, although it's a little unclear how exactly SBA is going to be treating that. And so I do just want to put a quick plug in that we've tried to, as a service to our clients, is we've put together a loan and forgiveness estimator. It's an Excel sheet that we put together to try and kind of help you work through some of the math, just as you're working through it. And so that'll be something that we're gonna try and have available through our website, but you can also certainly email any of us, and we'd be happy to share that with you. If you are looking for additional resources, here's some links. So this will be posted to the Chamber website later. You can click on these to actually look at what the sections of the CARES Act say about the program and about the loan forgiveness. The interim rule that SBA released on April 2nd, and then the SBA guidance and facts, which they are continuously updating. It was last updated, yesterday. There's a frequently asked questions that included new questions yesterday, and they're going to certainly keep updating that as we move forward. And then additionally, looking at the SBA New Hampshire District Office website, and then also we're trying to keep some information, getting that out on our website. And lastly, if you have specific questions, you're obviously more than welcome to reach out to any of us. We'd be more than happy to help answer those questions and help you work through some of those issues. And so I think at this point, you know, obviously we wanted to open this up to questions. You know, if you've got questions, Emily mentioned, you know, writing those in the Q&A section. I can see it popping down, so I think people have figured that out. So we're gonna, I think, open that up to that.
Great, thanks, Nat. So we've gotten a lot of questions, and I'm going to try to group them together to try to make them make some sense. So a few questions about being self-employed, and this may be a question for Tony. If you are self-employed, how do you apply and how can you get forgiveness?
This is definitely a question that a lot of people are asking. I was on a webinar yesterday that featured the New Hampshire SBA director, and this came up quite a bit. And there's a lot of confusion. There's not much guidance on this, but this is what the key takeaways seem to be. A self-employed person, they generally report their income on Schedule C of their tax return, but that may not fully give a complete picture of what their income is. So really, what is being asked is to show the draws or distributions or the cash taken out by the business owner during 2019 seems to be the most realistic period. You could use the period April 1st, 2019 to March 31st, 2020. 2019 data might be easier at hand. So the key thing is how much cash is taken by the self-employed person from the business. It could actually be more than the net income, based on things like depreciation deductions. So that seems to be the key thing that the bankers want to see.
Great. And then also for self-employees, if you are sole proprietor and you have submitted your Schedule C to your bank, but you've had much more income in the previous 12 months, is there a way to use something other than that 2018 Schedule C so that your loan amount can be greater?
Yeah, the only things that I've heard, and again, we're living in a world of limited guidance, is 2 periods. Basically, calendar year 2019, the statute officially calls for the 12 months kind of before applying. So that April 1st, 2019 period to March 31st. They've kind of liberalized it a bit, knowing that not everyone might have that great data for 2020, and kind of loosen the rules to allow 2019. But I've seen suggest that 2018 data is going to fly.
And if someone has multiple businesses, should they apply for each individual business or apply just as one altogether?
Well, I think that really depends on whether it's a sole proprietor, kind of independent contractor business, or whether someone might own several like corporations. I think in the case of an entity, it would be each entity that would apply. If it was a sole proprietor that had different activities going on, I think it would just be the one.
For some questions about the interest rate, can the interest rate change? It's currently 1%. It had been lower. Can banks change it? Can the SBA change it?
It's set by rule. It's anything that's not forgiven. It's a 2-year loan at 1%. So I don't, it could maybe be refinanced with a different loan, but as currently written, the rules, I think it's just a 1% loan.
And do we know what will be the interest rate on any unforgiven amount that does roll over?
I think that's the 1%. Anything forgiven is forgiven, so.
And if it's not, and after 2 years, what happens?
I don't know that we have any rules on what happens, but I mean, it's a 2-year loan. So I mean, it'd have to be either repaid or somehow rolled over with a different loan at that time.
we received a lot of questions on the forgiveness calculation, which is not surprising. That seems to be a hot topic. So for employees making over $100,000, how much of their salary can be included in the 8-week period for the forgiveness purposes?
So I think that is just the prorated part of a $100,000 salary. So I just did some quick math. I'd seen this question. So let's say that they're making 100,000, and every week that would be almost $2,000, and 8 weeks would be a little bit over 15,000. So I think anything over that $15,384 could not be included as part of the payroll costs. That's just a cash payment. The benefits and stuff would be extra. That could be added.
And when does the 8 weeks start that you have to use the loan toward your payroll costs?
Yeah, I'll let Nat take this. I think that he's kind of looked at those rules a little more closely.
Yeah, so it starts at disbursement. Yeah. So the 8-week period starts the minute, I think the day that, kind of the loan hits your bank account from the bank is currently the most recent guidance that we have. I think there's a little bit of, question about whether it's the day after, whether it starts that day. I think that we will be getting more recent, I expect guidance from the SBA about how specifically, but it basically starts when you get the money.
That's a general caveat.
Yeah, Nat, this is Connie. The SBA director for New Hampshire, Rachel Roderick, said that yesterday in a webinar when she was asked that question. It's the date of disbursement.
Okay.
And do you have to use all of the loan proceeds during that 8-week period?
To be eligible for loan forgiveness, you have to use it during that 8-week period. If you don't use any portion of that during that 8-week period, then you wouldn't be eligible for loan forgiveness on the unused portion. But it still would count as a, I think it would, as long as you use it on those, authorized uses, you would be able to use it. I think there's some, I don't think it's entirely clear if you don't use that during that 8-week period, whether you'd be able to use it on any other of the authorized purposes after that 8-week period, or if you'd have to return it immediately. I think that's somewhat clear, and we would expect more guidance from the SBA on that.
It's definitely something that, more guidance we appreciate on. My guess is that you could continue using that money. It's not going to be forgiven. It would be subject to the 2-year 1%. That's kind of a guess at this stage, lacking any other guidance.
For the number of employees being maintained, is the key determinant on forgiveness, assuming you don't lower payroll by more than 25%, is do they look at lowering wages by 25% for any employee, or is it just in total?
It would be based on each individual employee. So if you reduce one employee more than 25%, then the impact of that reduction beyond that 25% would reduce your overall loan amount. So it's not something where you're taking an average reduction. You're not going to take, you're not going to combine your total payroll before for one of those two comparison periods, and then compare that with your total payroll during the covered period, during that 8-week period, and then comparing that percentage differences. You're actually, the way that the statute is written is you're looking at each individual employee. So you're going to look at employee 1, employee 2, employee 3, and even if overall you haven't reduced salary by an average of 25%, if you've reduced one person's salary by more than 25%, then the loan forgiveness would be reduced by that amount.
Are wages calculated for the 8 weeks based on cash payments, paycheck date, or accrual basis?
There's no guidance on that yet, but I mean, this whole program is really based on cash, using the cash. And so, I would advise people that you need to spend that cash. And so, you might make a pay period payment that included some time before you got the loan, but the cash went out, obviously after you got the loan. I think that that's the way it's designed to work.
Also on the topic of forgiveness, for the requirement to use 75% of the loan on payroll costs to get the full forgiveness, is that based on the loan amount applied for and received, or is it part of your actual payroll costs over the 8 weeks?
So the 75% is going to be based on how much of the loan proceeds you actually used. So if for example, you had a $100,000 or if you were approved for a $150,000 loan, but you only used $100,000 during the 8-week period, then that 75% would be calculated on that $100,000 of loan proceeds that you actually spent during that 8-week period. And for that, you'd have to spend, to get the full $100,000 that you spent, to get that full $100,000 forgiven, you would have to have spent at least $75,000 on the payroll costs.
Also on forgiveness, are FICA taxes included in your forgiveness amount?
No.
Well, the withholdings on the employee's side are included. It's the employer's portion that is not included.
Yeah, thanks, Tony.
If employees are already laid off, how does that work into your calculation? And should you rehire them before applying for a loan or rehire them after applying for the loan?
I think it doesn't matter whether you hire them before or after applying for the loan. It's only going to come into play in terms of the loan forgiveness calculation based on whether you hire them before or after the disbursement of the loan. So ideally, you would have anybody who was furloughed or laid off prior to the loan application, you would have them on the payroll on that day one of that 8-week period. And I based on what we can understand, and again, without further guidance from the SBA, obviously we can't be sure, but as long as you have the FTE calculations are based on what's happening during that 8-week covered period. So if you hire them the day before your loan is dispersed and they're on for that entire 8-week period, you should be able to qualify for the as much of the forgiveness as possible.
If you do rehire someone by June 30th, how long do they have to stay on the payroll to make sure that it really counts?
Sorry, can you repeat that? I didn't catch it.
If you do rehire someone by June 30th, how long must they stay on payroll for it to count for your forgiveness?
I don't think we have the statute only mentions rehiring by June 30th. It doesn't include anything related to how long they need to be. So I think that's something that the SBA will need to issue new guidance or further guidance about how they're gonna consider that.
Yeah, this legislation was drafted like incredibly quickly. There's obviously a lot of gaps where they didn't have time to think through everything, and anti-abuse rules don't really appear at all in the statute. So it's going to entirely be, subject to SBA rules. If you hire them on June 30th and then you fire them again on, July 2nd, perhaps in your forgiveness application that might come up and you might get denied. But there's nothing in the statute that would require that result.
And I'll also just add, the loan forgiveness application you're gonna have to make some certifications. And so without seeing what those certifications might be, it's hard to answer that completely, given like a situation like what Tony was mentioning, where you try and game the system. That might have something that would be a consideration in those certifications.
One thing we've seen come up quite a bit is if an employer is trying to rehire employees, but employees either refuse or can't come back to work yet because of childcare issues or because they are making more on unemployment than they would have at their job, does that count against the employer in looking at their forgiveness calculation?
So
This came up yesterday with the New Hampshire SBA, and the answer seemed to be, if an employee were to do that, it's kind of the employer is out of luck. It's a calculation based on number of full-time employees. What the employer could do is go and hire a different employee and say, you don't want to come back, I get it, but I want to keep my ratios, as pristine as they can be, and I can hire somebody else. So that might be one alternative for an employer faced with that.
One caveat is you have to be careful about if that employee falls into some special category. You might want to talk to somebody specifically with employment experience. Unfortunately, none of the four of us are employment lawyers, but I would be cautious about firing somebody and then rehiring them without carefully examining their records.
And then the other thing I'll mention is that for these calculations, it's only considering payroll costs. It's not actually considering, there's no requirement that the employee actually has to be working. And so for a situation where it's a child, a covered, that they can't come back to work because they're taking care of a child or a sick family member or something, as long as they're on the payroll, they're counted as FTE. There's not the guidance we have doesn't require that the person is actually coming into work and actually working. So that's something else to consider.
How does the PPP interact with the Families First Coronavirus Act and other programs such as a workshop program through Employment Security? Can you be doing these things all at once?
You can't take you can't count the payroll costs for the PPP to the extent that you're getting a credit under some of these other acts that we didn't go over in this webinar, but about sick leave or family medical leave based on COVID-19. You can't. There's a general double dipping, anti-double dipping rules throughout these emergency provisions.
If the 8-week period starts when you get the loan, but the business is closed under executive order, how can the amount be fully used within the 8-week period?
Yeah, well, this is kind of a policy decision. And so, the policy is, hey, there's potentially a bunch of free government money. And the government is doing this to try to keep people on payroll. They would rather have, be sending money to employers to pay people who may not be fully, engaged in their work than to have them on unemployment. That's basically the whole policy behind this. So I do know that that's an issue for some employers that kind of feel like, hey, why would I possibly be paying people to not work? But that's the kind of the trade-off here policy-wise. It's kind of like, well, you can get a bunch, you can take out this loan, you can get a bunch of it forgiven. I mean, you're essentially will be basically paying unemployment directly to your employees rather than having them go to the government and get unemployment through them.
And on that same note, can employees collect unemployment if their employer has received a PPP loan?
So I would say that if they're on the payroll and they're receiving, I think this potentially is more a question for an employment lawyer. Lindsay, so chime in if I'm wrong on this, but you can't collect unemployment if you are being paid for working at a business.
Right.
Even if you're not actually physically working, but you're still on the payroll, then like Tony said, there's a general prohibition against double dipping, and I think that would certainly count as double dipping. So
That's
But
right, and I think it may depend on
if-
the employee. If the employee is seeing a reduction in their wages still, they may qualify under the expanded unemployment benefits because the expanded unemployment applies to a full unemployment or partial unemployment. So if someone's hours are cut back, but they're still on payroll because the business was able to stay afloat with a PPP loan, that certain individual may be able to qualify for unemployment, but I think those would be limited circumstances. Tony, can you clarify the difference between the amount that isn't forgiven and what that interest rate is versus any sort of rollover of a remainder loan that isn't paid back within the 2-year period?
I mean, the amount, okay, so what happens is, you take out a PPP loan and it's a loan. And in order to do that, you have to sign some loan documents. And, there's a term, which is, it's a 2-year term loan with 1% interest. Okay, now part of that might be forgiven. It might be forgiven in just a few months' time. 100% of it might not be forgiven. Okay, that part that isn't forgiven, it's still the same loan that you took out up front. And so the interest rate is going to be 1% on that. Now, eventually, 2 years will pass and you have to make some, balloon payment at the end. And if you don't make that, then, you'd be under default, but you may be able to refinance it with a different loan. That's about is all the information we have at this stage. Obviously, the 2 years is a long time from now. In the crazy world that we're living in, a lot can change between now and then. Additional federal legislation almost surely will be passed. There's a lot of details we just don't know yet. But if you're looking ahead to say, hey, I don't think I'm going to be eligible for full forgiveness, I think you have to plan on saying, okay, well, I'm going to have to pay that amount back, and I have to pay it back, at 1% annual interest.
Can PPP be used to retroactively pay employees if you had reduced their salaries or hours back in March?
From what I can see, there's nothing that would prohibit an employer from, for example, paying a bonus to somebody, during these 8-week periods. The government wants to see that money going to employees. So we don't have rules. There's nothing that says, hey, I actually never paid my employees for March, and I'm a month late on paying them. There's just no rules whatsoever that would tell us whether that's okay or not. But I think technically, a technical reading, there's an argument to be made that you could do that.
And with the caveat that there are other issues with the labor laws if you're not paying employees promptly, but let's save that for a later date. Is the amount forgiven taxable to the employer?
No, it's not. I think the interim rule specifically clarified that it wouldn't be.
No, that's correct. The amount forgiven is not taxable to the employer. It's still unclear whether they would also get a tax deduction for the amounts that they use. They normally would have a deduction, for paying employees and paying rent and paying utilities. If you're taking this money, essentially a grant from the government, to the extent it's forgiven, there are code provisions, Internal Revenue Code provisions, that would generally provide that you would not get a tax deduction. But the IRS has yet to speak on that issue.
And we'll do one last question. Do payments to an office cleaning crew or other independent contractors like that count toward your forgiveness amount?
No, payments to independent contractors. There is guidance that independent contractors are eligible to apply for their own PPP loans, and that's what they should do. So if they're not employees of the employer, then that's not going to be treated as a payroll cost.
All right. Well, I know we had a couple questions we weren't able to get to, and we will be getting a list of the questions at the end of this. Emily, thank you. You always send that along. So We will try to get answers to those and invite people to reach out to us with their questions. We're happy to help. And Emily, I think you had a couple of closing remarks before we sign off here.
Yeah, first off, I just want to say thank you to Orr Reno again for presenting today and for sponsoring this webinar series. We are going to be presenting these on a weekly basis, and we're planning to do same day, same time. So as things are changing, we will release our topics. We want to make sure that they are, the most accurate to what people's needs are right now. So stay tuned, follow the Chamber's website. You can subscribe to our e-newsletter if you'd like to get the latest information on that. But I will be sending a recorded version of this webinar with some other resources to everyone who registered today. So thank you so much for tuning in, everyone.
Thanks for having us.